In this module, we will be covering a little bit more, as you have seen in the title, the smart money trap and the FFS zones. So again, it's really key for us to identify why they don't work, as opposed to just saying they don't work. We need to, of course, explain that. You have, of course, been explained it in the previous modules. Again, I am just showing you a few more examples and variations to understand it, essentially. So we've got a nice, easy example in front of us, which is already played out the smart money trap over here. Again, you should understand the characteristics by now, why it's a smart money trap. We get, of course, the valid, should I say in quotation marks, valid zone, and then the nice mitigation. Price gives us the perfect reaction. However, it then fails upon inducing over there with this little minor inducement. So what does that essentially mean? That is this zone invalid completely? Now, I would say it's not necessarily invalid. In LIT, you can, now I would say can in very strong, bold remarks over here, that you can sometimes trade a smart money trap only if it provides strong confluences. Again, you're taught more confluences next week, so don't worry. In week 3, you have a lot more confluences on hand on how to actually enter. However, for now, of course, it's important to generally veer clear from the smart money traps to avoid essentially being the smart money trader, or whatever you want to call it, that you expect price to hold. So in this case, it becomes a pullback. If it provided a valid entry, then yay. If not, then no, you don't take it. However, the more pro trend would be this mitigation, however. And again, we have confluences why this zone is far more valid than this zone here. Essentially, we can briefly speak about it. We've had our inducement low, perfect liquidity there, as well as here. Price vectors, perfect vector candles, induces low, finishes inducing whatever is to the left with significance. However, that provides us with an overall pullback. So this is an overall pullback. This is your fractal pullback if you take it, hence why it's not the nicest trade to take, as it's not the prime pullback. It's a fractal pullback within a pullback, if that makes sense. So essentially what happens is price now has done what? So this is where it's really key to understand. We've had an inducement high, perfect. So what happens? Likely we may mess around a little bit more as we approach the next timing session. So this may not be necessarily the absolute high. We have, of course, induced the liquidity here as well as here, and this high over here being, of course, a structural inducement as opposed to a liquid inducement over here. So we've induced high. Price could potentially start creating more liquidity as we head into the next session. So what happens is if we now induce high, whatever price chops around, maybe induces again, what that means is price likely has now induced enough liquidity high, and we have our liquid targets low. And that's not a straight line. I'm not that good at drawing, as you can see. So what that means is we have liquidity targets low. So correct, we have a target. Now we also have a smart money target. Now this is the key one where you're probably questioning, is this a valid zone? Essentially, it's not, because we've now pro-trend induced high. Price can now induce lower. However, just depending on the characteristic, we may get a reaction like this, and then price smokes, or we may simply just smoke through it like that. So essentially, very key to understand, have we had an inducement in the opposite side, being the reason will we take the smart money trap, or should I say POI, essentially. So in this case, what happens? So we have, of course, our session. This is London. What happens is we get that slight inducement high again of this point there. Again, inducement of London open, taking out these structure points. What is it doing? Before it did that, essentially just builds this bigger trend line. So don't know why I halved that, but it's what it is. So we, of course, have a trend line target now. What do we get? Mitigation zones in here. In London open, perfect. We can, of course, now take the continuation. What is it? A FFS, because price did not even give a reaction. So this is really, really nice to understand. Of course, we've induced high first. Remember, we need a build up, whatever it be, equal highs. Of course, previous day highs, we've induced the build up. Price now reverses, in the pro trend direction as we have greater levels of liquidity that still aren't complete. So essentially, it's really key. You can take the inducements both high and low. It's just very important when to take them and when not to take them. So if we look at a little bit more of an advanced example, based on what you've been taught before, this is where it becomes key of essentially which is RPOI or POI or smart money trap or FFS. So of course I've marked them all up somewhat similarly. Now it's key to understand, okay, what actually is it? So if we briefly just mark up liquidity, of course, we know in Asia range, we have our perfect quadruple top equal highs type of thing. Same thing here. Not good at that. Let's do it again. Let's do it again. Okay, so somewhat of a support resistance thing. And again, you've got it fractal going on in between. You can also mark that up, but within Asia, it's not really important at all to mark up these little zones. For understanding purposes, it's of course nice to do that. So what we have essentially is two zones to the high side. So is it going to be this zone or is it going to be this zone that we can potentially react at? And now the next thing is why these zones? That's where it becomes key. Like, why could it be this zone or why could it be this zone? Or do we just guess like a lot of smart money traders do? So essentially some say it's a whatever decisional thing and then an extreme when that's like, that doesn't help you understand market intentions. That's just calling things for the sake of it. Like, yeah, not very helpful in that sense. So how we understand it, of course, is key to understand where is the smart money trap or FFS or POI zone. First, we have to ask ourselves that question. So essentially, what is the likely chance what will happen based on what you were taught? So we get, of course, London Open. So what happens as we approach London Open, price vectors out. Not only, of course, Asia range has been induced in Frankfurt down here, London is continuing to induce. That's very, very important to understand that we may not always get a minor inducement of Asia high and then always continue. It's really important to understand how we finished continuing. So we get inducements, reactions like such, and then another inducement, reactions like such, and then another inducement, etc. So these are essentially forming one big inducement, but these little zones are usually your tradable zones, how you can also take pullback trades only when presented. So currently we have that. Essentially Frankfurt did induce high out of Asia. London pulls back into zones over here, like your mitigation zones, a little bit higher than that, but you see the point. So London induces with vectors, probably a little bit tricky to see, but you can tell over here it's a, of course, FFS zone, as you can see. So it's blown straight through it. This point is completely smoked through, as you can see. So what that likely means is we have a nice POI here. Now that is probably not enough to make you think, well, still, why did that happen? So it's of course important. Why is this zone generally not a valid one? Well, we can see, firstly, if we try and draw a straight line, okay, it's as straight as it gets. Not very straight, but you can see already when it comes to the UTC timing +2, this is already late in the day when that reaction occurred. And we get a very weak reaction over here until we head into Asia. So what that meant, of course, is we can likely expect yesterday's high, because of course this is yesterday's high, to be taken out. However, this area, on the other hand, is a very clean inducement to what happened to the left. Of course, you can't see it in this chart. However, it induced major liquidity to the left. So how can we also identify that? Well, we have perfect trend lines over here in both forms. We get the most cleanest vector candles ever, as you can see, and then we get the most perfect reaction bearish. So essentially what that means is we've had our first stage of the buildup over here, second stage of the inducement, and now we're missing our mitigation, which occurs probably the next day, as it of course occurred in New York Open, over here. Towards the end of the day, we get, of course, slow price action and more of a liquidity buildup. So is this a valid point? Essentially, yes, especially as we approached timing. So this zone, essentially to the minute, almost to the minute. Is it to the minute? I can't see properly, but almost to the minute. It is, of course, the London Open. Not only an inducement, but also mitigation of a relevant POI. It's the last stage, it's the mitigation. So essentially what happens now, if we have our inducement high, we've completed all the stages, we maybe get mitigation zones here. What does that mean for this point over here? Is this a valid point? Now, remember the momentum mitigation stages of the effectiveness of the pullback, essentially. So what this means is, did we tap in here first to then continue to induce our original targets we had, such as Asia, as well as, of course, the smart money trap over here? Did we tap into that first? If we did, then this is clear to take, again, with additional confidence. But because we haven't, what that means is, as price reverses, we're not interested in taking this at all. Why is that? Again, like I mentioned, inducement high, we've completed the target high completely. Now we can start taking out lower levels of liquidity, including these equal lows type of thing, as well as down here like such. So let's see how that, of course, will play out. Well, in this case, it's a smart money trap. Again, we get a reaction, gives this little choppiness here. But what happens ultimately? Price induces. So smart money trap there, and then an FFS over here. Just important to differentiate the two. It shouldn't be so important in the sense when it comes to your confluences, but more so just for understanding purposes. So yeah, we've given a reaction. Smart money traders will get in here thinking it's amazing, and then yeah, they may be at break even or even a loss if they're not very good at risk management. And then of course price reverses on them and takes out all of this liquidity to the left. Why is that? We've had the major inducement. This is why it's key to really understand your minor, your medium, and your major inducements to avoid taking unnecessary losses as well as making up bits of the cycle. So let's see another example. So a little bit more of a clearer chart. There's not much words on this. I wanted to go a little bit clean, as you should have the orientation currently. So we're going to be reading this again in order. Again, very key, mark up the liquidity. I think it's pretty clear to see the liquidity when it comes to your overall liquidity. Of course, you get your lows, those here, not really relevant. Why? We've technically induced low in Asia. Again, it's a cycle within a cycle. And then, of course, your highs over there as well. So let's actually understand what happened. So what do we have as a zone of potential interest? Where is your POI that you could potentially think of? There's only one area here, really. So as we're, of course, going bullish, what is the target? So smart money traders essentially see this zone there being the only, you could say, real imbalance, and it's the somewhat extreme, you could say. So what happens? Of course, we will be approaching soon London Open. Currently, we are in Frankfurt with a really nice reaction. We get an inducement in London. Perfect vector candles, couldn't be more clear. Completely smokes the zone. What is it? An FFS, of course. Let's draw that with my beautiful handwriting. So we've got an FFS over there. What does that mean now? So again, we are identifying our potential zones. What zones are valid and what are not. Next zone. Is this zone valid? Essentially, no. Why? We've induced enough liquidity high, including yesterday's high over here, also being equal highs. A smart money trap, equal highs of Asia, this trend line type of formation, equal highs everywhere. So essentially enough liquidity has been induced. We've had our second stage, so build up and then inducement. So likely we should find a mitigation over here and then expect price to reverse and take out lower levels of liquidity like such. So let's see. Of course, it's a smart money trap. It's kind of a tricky one. You could say this is also a FFS. Oh, sorry, what am I saying? Essentially, it's somewhat of a smart money trap, but arguably it's kind of an FFS in my opinion, because it barely gave a reaction in this wick, but whatever you want to call it, it's of course a trap. So you get trapped, of course. What does that mean now? We've induced low. What can price likely do now? We have what? Remaining liquidity, not a very strong reaction. So price has got a target to the high side, potentially. Again, we need more confirmations for that. We may not have induced Asia low yet. So that's why you might realize that Asia low or Asia high some days may not get induced, either or. Usually one will get induced. And that's because price needs to build up, of course, liquidity for it to be taken out. So in these scenarios, you get these really nice internal plays of inducements high, internal inducements of this liquidity, take out smart money traders, as well as this trend line type of thing. Remainder trend line / equal highs. What does that mean? Price induces low, you get mitigations on the 1M over here. Then what? New York becomes the continuation essentially. Why would it become the continuation? Look where we are when New York opens, right there. Is that valid to take a sell? No. So this is why, of course, as you've been told, you're smarter than a clock. And of course, key to understand, the prime cycle comes before timing, essentially. Timing is just a guide. So you get another trap over here, essentially. So what does that mean? New York gives a potential pullback trade only into these nice mitigation zones to continue. Again, what does it do? Take out this with, of course, perfect liquidity. Couldn't be more clean. Now, these, of course, are variations to the cycle. Again, you'll be taught that next week. More for intraday mastery, should I say, when it comes to that. But again, key, very key to understand, of course, the smart money trap zones and how to avoid them is to see the inducement first. Inducement high, makes a cross. Inducement low, of course, a cross. Just nicer in this reaction where you get pullback trade. Why? It's also New York, so timing does permit a pullback sometimes. So in this next example, this was only taken yesterday at the time of recording, so I don't have the full price section as it was, of course, occurring. Now, this is a very, very interesting one, and one where smart money traders will probably have got really mad, and I'll tell you why. So what do we currently have to identify is, of course, your smart money zone or POI, whatever you want to call it, the mitigation. So we only have one mitigation area here, essentially, as there's no other real POI within this area over here. So what does that mean? Likely, okay, price may react. If it does react, of course, we must understand we want to, again, take additional confluences to see it as a valid entry. So let's see what happens. Perfect. Price gives us a reaction. Now what happens is, okay, it gives us this first reaction. However, the first reaction may not always be the right one. Maybe there's, of course, a 1 minute going on in here. And this is, of course, by the way, a 5-minute chart for reference. So generally a 1 minute may be here, and this may be your false reaction that you first get in. So additionally, we want to see, okay, what's going to happen? We want to see our inducements. We don't necessarily want to take it from a blind POI like such unless we get confirmations. So in this case, let's identify more zones. Now, this is where your smart money trader would get confused of the buy and sell aspect and claim they can trade intraday. What is this? Another zone. Do we take the buys? Let's think. Could potentially be a pullback. However, at this point, we're so early in the day already, so we haven't even approached London. So what might happen, almost approaching London down here, maybe we react a little bit like such, maybe we react. But what that means is we need to understand this could be a pullback. But does our pullback necessarily mean we mitigate this area, or does it induce the zone as a whole? Now, that's an interesting one because, of course, we likely want to expect to see an inducement, and this not being necessarily a valid zone where early traders get in, essentially. So what happens? Perfect. London does actually give us that nice reaction. However, we get this nice liquidity. It's just a very weak reaction, I would say. So what happens? We get, of course, our zone marked up like such. Now it's a question of, do we take the buys or do we take these sells? Or if you're already in these sells, do you hold these sells and take another sell, should I say? So that's the question of, well, what's happening? We need a nice clear inducement, ideally with timing. So now our main session has opened, so being London or New York, so one of the two main ones. We've had, of course, a reaction, not the clearest reaction when you currently see the window over here. So we want to see some sort of inducement Ideally high to come low. Why is that? We have perfect liquidity here. We want to take out Asia low essentially. And then of course we also have our highs from the previous day. So we have a lot of liquidity targets, both high and low. We just want to see what does price want to do in that specific moment. Does it go lower or does it go higher first? So let's wait for an inducement. Perfect. We get an inducement of the smart money trader here. Probably a lot of mad people as it barely takes out their stop loss. And then what's going to happen? It's of course going to reverse on them. Perfect liquidity. Inducement high. Very fractal inducement, of course, over here. Price continues. Takes out this equal lows or quadruple bottom, whatever you want to call it. And then, of course, what does that mean? Can we gear up for a potential buy? I mean, why not is the question. You get perfect vectors, equal lows, liquidity. Again, I marked this up about 3 times, but I hope you get the point. Of the liquidity being the 1, 1, 1, and then 2, inducement. Now, what does that mean? Can we take a buy? Potentially, but let's first see, where does the smart money trader also want to get in from? Well, they see their sells over here. You know, we've got the extreme now. But does that mean this is still valid? That's the question, right? So it's a lot of confusion, as you can probably tell. There's zones everywhere in this example. So what happens? You can probably guess the zone gets induced ever so slightly again. A lot of annoyed people, both there and here. Here, they maybe got a little bit excited, but maybe they were at break even. Same thing here. So again, these scenarios, you can see almost every single zone got smoked through. And this is why you should never just look at a mitigation zone purely just because it might look nice. Now, if you remember in the previous example, when we had this zone to the left, it was very clear because it was a major inducement, gave the characteristics of the, of course, vector candles going high, then the reaction. So hence why the zone over here was your smart money trap, and this was, of course, the prime zone. So only when, of course, to the left, it was an inducement, is it potentially valid. So in this case, we can see that's all liquidity. This is completely invalid for any sort of entry to take as such. So that is it from me. I hope you understood a little bit more about the smart money traps and how they occur again and again and again, never end essentially. So it's really key to see an inducement first, like such. Over here, inducement low, go high. Here it was inducement high, go low. Again, inducement high, likely will give us a reaction, probably a little bit brief as it will be appearing towards the end of the day over here. Could potentially take a target there and then price chops around for Asia. So I hope that was clear enough for you to understand. Again, I would highly recommend that you start marking up zones and identifying your smart money traps where you maybe, if you were a smart money trader, would have taken, and watch how they react. Why are some valid and why aren't some valid essentially? So I hope you took a lot from that and enjoy.